Friday, July 11th, market analysis, Stan Ehrlich. Good morning. A little early this morning at 9:43 California time. I usually start slightly later. I want to remind you this is the last day that I'll be doing my market analysis YouTube video at this time. I'm going to do that after 1 o'clock California time, somewhere between 1 and 2, typically every day, like the last 2.5 years, plus, but later in the day after the close. I have other obligations I'm going to need to pay attention to during market hours. So this recording will not be during market hours, real time. It'll be at 1 o'clock to 2 o'clock when stocks have closed. Some futures are very close to their close, and that's that. So this is the last day at this time. I'm going to start at around 1 or 2 o'clock, and you'll be able to view it, of course, about after 2 o'clock California time in the future. Thank you very much. And here we go. We start market analysis with stock market indexes, go to the futures markets, and then go to some stocks. And sometimes other topics, cycles, seasonals, pretty much the same thing. Psychology of trading, chart formations, whatever. If you are interested in something in particular specific, there's my email address, info@ersignals.com. Send me a request. S&P 500, E-mini. I think you've got a minor double top here in the last week or so. We are down fairly significantly, about 2.5 points, but that's not a lot. But if we were at the lows, we'd be down around 5 or 6 points. That's under yesterday's lows, and we're overbought again, and we are struggling to maintain prices above old historic highs, but we're still there. So it hasn't nosedived into new low ground for approximately a week. That would be for 1, 2, 3, 4, 5, 6 previous days, 6 or 7, almost 7. When and if we get below, specifically 62.46 and a quarter. That's the lowest low in the last 6 days. If we close below that level, then we should be on our way down significantly. Now, this broad trading range allows me to forecast one support area, which I am probably about to put a horizontal line at, and I haven't done it yet. Here it is. That looks pretty good. Sort of. Not. Good, sort of. Not bad. Good. And then, more significantly, recently, resistance. And now it's going to be support at approximately 61.10, 61.08 on the way down. And then the most important one is at 59.50. If that breaks, we could be in for a lot more weakness. 1 minute chart, sideways for the moment. Maybe a little bit of a top building here. You know, a little small shoulder, head and shoulder in the last few hours. Okay, the S&P 500 should be similar, and of course it is. We have the market overbought conditions, new historic high ground, but it's not acting normal when you go into new historics. Usually you have a pop-up in a new high ground, which it basically did. Pull back, close the gap. If there is a gap, it did. Come back to support, which it came back some, but not that much. And then rush into new high ground, which is stalling out a little. So I am still talking about, and I have been for probably a week or more, some sort of minor downside move that could develop into something much bigger. I can't tell yet. And the 1 minute S&P 500 sideways. Now, what about the QQQ? Also new historic highs, overbought, tiny double top over a week or so, having a little trouble, losing momentum. Let's see if you can't get some downside breakouts. Next, 1 minute chart. resistance short term here today, stopping rallies. We get over 555.50, then we could probably pop up to the high of yesterday, or at least 556.30-ish. But again, my intermediate to longer term idea is that we're overbought, not following through like it's normally following through in new historical highs. That throws up a red flag for me. Next chart, NASDAQ daily. Same commentary. Overbought, minor double top. Not yet giving me what I want, a new low closing below the lows of the last 6 days. That would cause me to be a lot more aggressive about bearish commentary and downside expectations. Right now, I think it is likely, but it hasn't started. Next, what do we got? Sideways. Next, we've got a bearish engulfing at the top of the market still so far in the Dow, YM. This is a new low with a close maybe below yesterday's low and very close to a new low for the last 6 days. Actually, 1, 2, 3, 4, 5, 6, 7 in this case. A little bit more bearish, not that big a deal. But the fact that it's got a bearish engulfing ER sell signal on the top so far, that caused me to start to be bearish on that date immediately. And so far, today could be a possible new low closing price. And if it gets weaker, we could break into new low ground for 7 days, 6, 7 days. That would cause me some more validity on my commentary and excitement about it dropping off a bit more. First downside objective, 43,473. Next, about 42,850. Let's see if we get there. Next, a 1 minute chart on the Dow. Yeah, just showing some weakness. Coming down, could break these lows, could hit more stops. Looking good in terms of my expectations. Russell, major historical resistance areas, overbought conditions. Essentially the same thing, except you have to leave out the historic high stuff. Various support levels on the way down, but again, I would be looking first for 21.99-ish, then probably 21.27 and lower. Next, the RTY 1 minute chart. Let's see if I can get the damn thing to come up here. Good, good. Looking a little soft, looking like it's going to zigzag its way down. Good. Bonds are dropping sharply. I did not think that was going to happen. I thought the market would probably hang in there and start to work its way higher a little more consistently. So this is throwing a little bit of a monkey wrench in things. It did not make a new low yet from the last few days. It is not oversold, so it could easily without being oversold. And I guess we're going to see a minor new low, probably in the ballpark of 112 and maybe a little under 112. Notes, extremely similar, as you might expect. But in this case, a rally up to resistance did stop the rally. We did not have a rally to resistance in bonds. Notes did, and it's doing what you might expect because of the resistance levels. So now I think we could dip down a little bit more. Remember, on a longer term basis, I do expect to see that the interest rate futures are bottoming out with a big multi-month, multi-quarter, maybe multi-year bottom. Long term. So a lot of days or weeks or even months could be fiddling around before we have that bullish breakout. Crude, and of course, I'll try to pick the turning points as I always have for 2.5 years. Actually, for 53 years since I started in the industry in 1971 as a runner on the old Mercantile Exchange on Franklin Street and the Board of Trade. So, crude oil, bearish engulfing on top, great. Now, starting to make new lows, a couple of days worth, but we have a sharp rally. This needs to fail. I don't know if it's going to or not. But if it does and makes lows lower than today's lows, I'll feel a lot more confident about it dipping down probably to 64.20. Then 61.18 and maybe even lower. I'm not long-term bearish, but I think the effects of the bearish engulfing on June 23rd probably will have more than one day down, which is all it had so far. And this is just dribbling back up so far. Normal retracement, although taking a little longer than usual. But the size of the rally is still very normal. And we've got a little bounce on natural gas after being oversold on Wednesday in a support area. Classic move, no problem. The complex head and shoulder top is still very much alive. All you have to do is stay below the neckline at this particular stage of the game, and I think that's going to happen. Maybe a little bit more of a rally, 3.5, 3.6 maybe, even a tiny bit more than that, but maybe nothing. It could start turning down right away. There's no rule that says it has to bounce. Support and oversold is causing a bounce, which is just fine with me. But I'm looking for it to not rally much or for very long and make new lows very soon. Next, heating oil. Oh, something like crude, same kind of thing. Maybe it'll get up a little bit more, probably not much. Looking for a bearish engulfing and or turn down. Now, yesterday we did have a bearish engulfing, and today's rally is not higher than yesterday's high, so yesterday's bearish engulfing could still turn this down without a new high. Not overbought, so I didn't turn red. That was overbought big time and a huge bearish engulfing. But this rally is not out of the realm of expectation. It just should turn down soon. Next. Rocking a hard spot in gold, sideways. Silver, something happened to silver this morning. It took off like a bat out of hell. Very strong, overbought again, probably too much too quick. We might get one more day of follow through up for high and last, looking like it could be making new highs still for the day. I'm going to check something here. I go back about 3 years. This could be historical highs, I'm not sure. But certainly very strong and overbought, causes me to believe the next downside retracement should be about down to 37.70. I'll put a line in there. Cross this high horizontally, good. Just a little bit better. Try to be exact as I can. So if that doesn't hold, next support, 35.50. But this does look bullish. This is a bullish breakout because it's a big move up, blasting through previous highs after coming close, and way good follow through upwards. So bullish, period. We've got platinum doing the same thing, not quite as profoundly, but very significant. So this is bullish for platinum also. I'm not sure what the upside objectives could be at this point. I'll have to figure that out maybe over the weekend. But another downside retracement should be very minor at this point. I'll put the line right here instead of a little tiny bit higher. So looking awful good for precious metals. We just haven't had a breakout in gold. Copper is holding just fine. I talked about the support line when the day they rallied up, July 8th, occurred. Something about tariffs, I'm pretty sure. Back to a support line Wednesday, generally holding on a little rally yesterday, touching support again today accurately, and now coming back up significantly. This is looking pretty bullish for copper. Next, grain markets. Well, soybeans are bouncing off of support. Yesterday it came down, touched it, and bounced pretty good. Today went all the way back down, same support, and bouncing off of it pretty good. Interesting. Didn't get oversold, but support is bouncing good. So I expect it to come up to 1028, maybe a little higher. The major breakout to the upside is going to be above 1077, 1075 area. That is going to be a profound breakout, because a little higher, you got a breakout of a neckline of a head and shoulder bottom that started almost a year ago, August. The first shoulder, December, second shoulder, and April, last shoulder low. This is a little lower than I would have thought, but it doesn't kill the pattern. Let's just see it start to go up a lot quickly. But I don't have a lot of faith in that because there's so much resistance above, and I would need some help probably for some other grains. Let's see what they're doing. Soybean oil is a little higher on the day, and it did break out of a head and shoulder classically on June 16th. Retracement toward the neckline with a low June 26th, classic, right out of a textbook. Rallying back up to overbought conditions, not quite a new high, and a little bit of a dip. Fine. Today, a nice rally. Yesterday, also a little bit of a rally. So it's doing the right thing, just not necessarily very aggressively. I like what I see. Next, we had a bullish engulfing, brand new one, the third one, in soybean meal, which is doing okay. At the moment, it's down slightly, but remember, I don't mind it coming back into approximately the middle of the range of the bullish engulfings within about 3 days, because that is ER signal 3. That's where I buy it, around the middle of the range of the bullish engulfing, which means I would be long approximately where we are right now, with a stop under yesterday's low at the lowest, if not at higher levels, because the automated system starts to raise stops very, very quickly when I'm long. So I'm liking what I'm seeing. But that's not good enough. I want to close at a minimum above 281. Then we're dealing with resistance at higher levels. So we have to overcome all of this stuff above the market in order to turn bullish intermediate to long term. Right now, I could see a good rally. Outside trading range day, but down at the moment on corn. New low for months and months and months. A very long period of time. Looks like over 3 years. Maybe a lot more than 3 years. That's not super important at the moment. So maybe we'll get a rally to close this gap. I've got a marker there, that rectangle. Maybe it'll come up to resistance. But this is nothing here looks like it's about to turn up. The only thing is it could get pulled up by the gap. Wheat, a little bounce, died, currently lower on the day, 7 3/4. I don't see anything here. Maybe a rally, doesn't look like it, frankly. Breaking below support levels could happen at any time, and a fairly sharp decline if that happens again. Remember, this is also in new lows for years. Next, we've got the stocks. Shell, basically a doji, unchanged for all practical purposes. A little resistance where we're at. Not sure what to say here. I'm going to pass on this at the moment. We've got a little bit of a dip. Apple did have a bearish engulfing official sell signal on July 7th. Now, there's no new high since. Today has dropped off just a tiny bit below yesterday's low. We are down on the day some. I think we're about to make it below 207.05. And I think we're about to come down to somewhere around 193 1/3 to maybe a little bit higher, 198. And it'll take a week or two. Maybe a lot less than that. Maybe only a few days. Next, Tesla. A little bit of a rally. Has almost exactly closed the gap. I need a high of 312.76. Today's high is 311.91. So, super close to closing the gap. I told you the gaps are almost always closed. This one is almost closed. What next? It could go up a little more. It's starting to go sideways. Last month and a half, we got a good buy signal at the bottom of that break. We did have a sell signal in the top of the market. Wow, December 18th, the top of the market. Okay, what's got next? NVIDIA, new historic highs again. My. It is overbought. I would not be buying it up here. I would be looking for new short sell signals. This is overbought fairly substantially at 81. Remember, if I get up to approximately 90 or higher, I start screaming bloody murder. It's about to turn in minutes or hours that day, or real soon, and probably not much more strength for a rally. But we're not at 90. We're at 81. So there is more strength, maybe, but it's too risky. Remember, if you buy it and it closes with a profit, you could open a lot lower the next morning and be in a problem. Next, we're back to the E-mini. Still looking a little toppy. 1 minute chart, nothing new. Maybe a little head and shoulder here. Making the last shoulder, maybe. Too premature. Got to start to see it coming down toward the neckline. And that's awfully upward slanted, awfully steep. So a lot of question marks as to whether this is good or not. I don't like the angle of the neckline. It's more or less flat to upward slanted, slightly under 70, 80% of the time. Okay. See you Monday after 1, probably closer to 2 o'clock. You have a great day and profitable trading to you.